I just switch gears a little bit. We're going to talk more about your background, and I know you've been trading for about 15 years. You got started sort of just after the tech boom was sort of winding down a little bit.
No, I was Nasdaq 4,000 to 5,000, so that's when all of a sudden, things kind of hit the fan. So I traded through that Nasdaq 5,000 down to Nasdaq 1,000.
Well, how do you think, starting your career in such a crazy time in the market and then dealing with the aftermath of that time in the market, how do you think your experience early in your career, helped to develop the type of trader that you are? And how do you think your style has evolved over the years? And are you continuing to evolve and continuing to grow as a trader?
What that did is it made me pretty risk averse because I saw people blowing up. You saw stocks come in 100 points. Oh, it can't go down anymore. Sure it can. So that gave me a system to use a level versus a level, which a lot of people talk about. And since starting from just say Nasdaq 5,000 down to Nasdaq 1,000, it also gave me a little bit of experience to deal with 9/11 because we know that that was also a very volatile time period. But then once that that stage was set, remember we had a nice rally when we invaded Iraq and we had a bullish trend. And I wasn't just shorting every rally like some people out there because they made money short on the other two market phases. So throughout just say a career through experience, you learn how to navigate every different market. You learn how it moves. You learn how the feel of it. So with that being said, it also helped put me in a position in 2007, 2008 to know that markets can go lower. I've seen this before. That's when you had the whole financial crisis. So that's when I was on CNBC with Mark and Aaron and developed a nice routine with them. And I tried to help people navigate that huge decline because it didn't feel as if markets were ready to rally. So throughout the course of the 13 to 15 years, I've educated myself. I've developed my process. I've seen many different markets. So, it put me in a position to say every time period is going to be different. Let me be flexible, but let me have a process and a system so I could think, with a level head when the market does change instead of getting caught in it.
It's funny that people call you a permabull. They call Mark Sperling a permabull because of the things that have happened in the market in 2013. Back in 2008, I can remember that shorting was the name of the game. Somebody's grandma says, "Oh, you're a trader. You must have done so well in 2013." For traders, it's not necessarily the case. Sometimes they do better in bear markets, and people don't realize that.
Well, everyone has their style. And like you said, in 2008, technically, you could have seen a lot of things. That's when technical analysis wasn't even as broad or as publicly accepted. I remember being on with Bob Pisani. He's like, "So here's Scott Redler. He specializes in technical analysis or voodoo or whatever it was." But meanwhile, I wasn't calling a bottom when all the guys who figured it had to be a bottom were calling bottoms because you could see the next problem. Every time the market tried to bounce, you saw then pressure on Lehman or Bear Stearns. Then the market tried to bounce, all of a sudden GE was a problem. Market tried to bounce, Fannie and Freddie were a problem. So technically, we saw the market bounce, stocks show relative weakness. So what do? You short those stocks and you don't think there's a bottom yet until things change. So with that being said, I think our firm had one of its best years in 2008. But then what we also didn't do is just continue to be short the whole way up like a lot of hedge funds who thought we can't go any higher and use their opinions and blew up their accounts. And they're probably very upset with where the market is right now.
One of your more noteworthy calls came back on CNBC in 2008. Another one that you sort of got laughed off for is when you talked about gold. It was 2008 or 2007?
Yeah, I think I was on the floor. This is actually a really funny story. So I'm on the floor doing Squawk Industry with Mark Haynes and Aaron Burnett. And Mark, he used to always pressure everybody. He didn't like I was young. I wore cologne. I ate healthy, not Cheetos and ketchup. People who know him know that's what he had for breakfast. But, which he actually made me a better person on the floor because he was so hard on me. So anyway, I said to Mark, I go, "Hey, Mark, I have a bold gold call. I think you can Google that." And my gold's going to go to 1,500 an ounce when it was, I think, 850. It was right around there because it had a technical pattern. It had a wedge type pattern. I thought inflation was going to happen, and then the whole, whatever the fundamental reason for it.
It doesn't have to be rocket science. It's a little bit of technical analysis with common sense is what you talk about as your trading style.
Yes, and then the funny thing was, I was on with Erin a lot, and she, validated a lot of my opinions because I was not calling a bottom. And then on Street Science, she was on with Dennis Gartman, and she said, "Hey, Dennis, Scott Redler said that gold can go to 1,500 an ounce. What do you think?" First thing he goes, "Who's Scott Redler?" I was watching and I'm like, "Really, Dennis?" Which I'm still, "Who's Scott Redler?" anyway. And then he goes, "If Scott Redler thinks that, he doesn't believe in the American way of life." And then I think around 1,200 he might have got bullish.
Yep.
But anyway, all it was technicals. You had a wedge pattern, and then right when it broke above 1,000, you had an inverse head and shoulders pattern that gave you a first technical move along the way to about 1220. I remember it. Then you had a correction, and then PS it went to 1900. So as long as the path was paved, didn't matter if my projections were a little bit lower.